Hey guys, welcome to this special trading tip for magnetic trading. Today I want to talk to you about using the futures contract chart for identifying support and resistance levels and actual breaks of key levels in the market. The problem with the cash charts are that they are affected by dividends. So the FTSE 100 has 100 companies within the index, and within those companies there are shareholders, and those shareholders are paid dividends. That dividend needs to be, it's paid out of the companies, therefore it needs to be reflected in the FTSE 100, and therefore those points are paid out of the index. And that can happen every week. Every week there's usually one up to sort of 20 points that is deducted out of the index. And for example, if the FTSE was trading at 74.07 just before a close on a dividend day, it would basically drop 7 points if the dividend was 7 points. So then you'd be trading at 7400. The problem with this is it then muddies the chart to some degree. Because previous support and resistance levels are distorted with these dividends coming off. A clear example of this is if we take the 4-hour chart, on the December chart, we can see on the 15th of November, we have a new low in the market here. Okay, market got down to 73.36. Now a break of this, of course, is bearish, and it's going down. Now if we take the same date, 15th of November, we can see, yeah, the market also made a new low here, but within this day, within this period, there was a deduction of around 14 points dividend. So so on the December contract, we never made a new low, but on the cash chart, we actually did make a new low on the 20th of November because of this dividend deduction. So it wasn't actually a clean break on the contracts, but on the cash chart, because of this dividend deduction, there was a false break on this, leading people to think that the market was bearish. So what you can do is you can use the December contract at the moment. I use a quarter out, so once the December is done, I'll look at the March contract. Once the March is over, I will use the June charts as well. And what I do is identify key levels, and I just look at the equivalent of the cash price. I trade off the cash market, and I just work out the difference. So at the moment, there's about a 7 points difference. So we know that if I was trading this, for example, today, and I was saying, well, look, if it breaks 36, it's bearish. So, and there's a 7 points difference, so we just add on 7 points to 36, and the cash equivalent is 7443. So I know that if I was trading off this chart today, I'd know that a break of 74.43, which is down here, is my sell signal. And that's a clean break on the charts. So that's a nice little example of why doing your analysis on the on the futures charts is so effective.